well. Let's get it to Abigail Doolittle. Looking at what else? Volatility. Abigail, take it away.
You're very kind, Caroline. And yes, volatility, because it's pretty interesting. We have the S&P 500 higher, but we also have the VIX, or the quote-unquote fear index, higher. You don't always see that. Who better to talk about this than Scott Bauer, CEO of Prosper Trading Academy. Great to have you with us, Scott. And the reason I say that you're great to have on this topic is every time I see this dynamic, I think of you, because you've been the person that has highlighted it in the past as a reason to think that maybe things are going to get even more volatile ahead.
Yeah, and thank you for that. I appreciate it. But, when you look at the VIX right now, the spot VIX, so the one that everyone references right now, it's up about 2% today. But if you actually go out and look at VIX futures, going out to May and June, July, et cetera, expiration, they're actually pretty much unchanged or down slightly. So what this tells me is there's absolutely maybe a bit of, just hesitation or concern for the near term, especially for this week. And if you think about it, there's so much that can affect the market one way or the other this week. Certainly with earnings, right? Tesla today, and then with Amazon, Microsoft, Apple, Alphabet, that can absolutely set the stage for what stocks do for the rest of the quarter. But besides earnings, you've got certainly the tax proposal issues, and you've got the Fed as well, and then of course GDP on Thursday. So I think that's why you're seeing this near-term volatility for this week up a little bit. And in fact, if you look at VIX options for this week, you see about a 4-to-1 call put ratio. So about 4 calls for every 1 put, meaning that, investors or traders, whomever, are looking for maybe a little bit of a rise in the VIX this week. And that's probably just to protect some positions.
So lots of uncertainty, Scott. We're still well below 20. We're actually below 18 at this point, so not back in last year's range. But you think that vol right now is so cheap, why not hedge, since we don't really know what's going to necessarily come from all of these factors of uncertainty?
I absolutely do, Abigail. If you look at the entire range over the last year, and albeit that range is certainly elevated since COVID. If you look at that entire range, we're trading at the absolute bottom. So, something you and I always talk about and that I tell my clients is buy your insurance when you can and not when you have to. When you go out shopping for your auto insurance, homeowners, you always want to get the best deal. Right now, volatility or protection is very cheap. So if you're going to remain long in the market, whether it's different sectors, whatever it is, why not buy some very cheap insurance right now?
Absolutely, and especially when you take into account the VVIX, which continues to spike higher on the month, the VIX suggesting that there may be reason to think that volatility could be on the rise. Scott Bauer of Prosper Trading Academy, as always, thanks for joining us for Options Insight. And from New York, this is